I have a question I want to ask you. Do you know how much money is in your bank account? Of course you do, especially if your finances are tight. There's no way you don't know. At that level, people have that number memorized. You know it when you wake up in the morning. You know it while you're at the grocery store. Those digits in your account run like a hidden app in the background of your phone. When I first entered the workforce at 18, I was working in a textile workshop for $8 a day. That money was precious to me because I had nothing. What little I had felt like treasure. Every morning I woke up for work, I'd calculate how much I was going to earn. At a very young age, the drive to make money had taken over my whole being. I wanted to stop it, but I couldn't, because stopping was an option, just not for me. This video is made to guide people who come from families with limited financial means. I'll try to share with you the roadmap from $0 to $94 million, the mindset at every level, the risks, the rewards, and everything I've learned. I won't be giving investment advice like, buy this, sell that. I'll only be sharing my experiences. If you're ready, let's begin. 0 point. Do you know what 0 point means? Do you check the price of olive oil, butter, or anything else at the grocery store, or not? You probably do. You're spending brain power on things you're buying without thinking. When this repeats constantly, an endless fatigue takes over your body. I experienced this firsthand in the early years of my youth. At 18, I had no money. Whenever I wanted something, I'd check my bank account. The people around me weren't in a different situation. I noticed this while working at the workshop. Everyone was doing the same calculation, but at the same time trying to hide it. Nobody could bring themselves to say, I'm struggling. You're probably suffering from the same situation. I have to say this, never stop doing that calculation, because that awareness will help you rise to the next level. If you stop keeping track, harder days will come. Count on it. First rule, when you're at 0, money isn't a tool, it's air. Either you have it or you don't. And most of the time, you can't tell the difference between the two. At 26, my partner and I were making a profit in the early months, but debts wouldn't leave us alone. What I mean is, expenses fill every gap they find. That's an unwritten rule. During that period, I understood how important small victories are. When I closed my lowest limit credit card, I felt an incredible sense of relief. I didn't tell anyone because even if I had, they wouldn't have understood. The turning point of my life began right at that moment. The first $10,000. When I earned my first $10,000, I kept checking my bank account constantly. That feeling of I did it was indescribable. That was the first day I ever saw a 5-digit number in my account. I felt the same thing when I looked at the reserve fund after setting up the factory for the first time. I was fighting my own emotions to keep from spending that money, because it felt like if I spent it once, it would never come back. The real issue wasn't about money. I was afraid of going back to my old days, to the broke version of myself. The more you earn, the more you want to learn. The more you learn, the hungrier you get. Then you start reading, not motivational books, real books. You learn what an index fund is. You open a brokerage account and watch it for 3 weeks without doing anything. Finally, you invest $1,500. The next day, the market drops. Do you withdraw or do you hold? Ask yourself this now. Are your decisions being made by your fears or by you? The answer to that question will chart the course of your entire life. Enough, but not satisfying. Let's say you're earning $68,000 a year. You have $40,000 in savings. You opened a retirement account, and you're contributing close to the maximum. You're doing everything right. Then you grab a pen and paper and calculate the next 40 years, your income, your savings rate, your current investments. But you see that the number that comes out isn't enough. Enough, but not what you want. I went through this at 30. And as my luck would have it, I was also going through hard times due to a currency crisis. I lost $200,000, but that mistake taught me something. It turned out I knew how to make money. I just didn't know how to manage it. The stock market, real estate, currency risk, hedging, that crisis taught me all of it. It was the most expensive lesson, but also the most valuable, I say now. But my thoughts back then were completely different. That crisis forced me to look for other income streams. It started as something I did as a hobby. I wasn't even looking at it as a business. Over time, it began making me money. I started at $400 a month. Then it went up to $900, then $2,000. But I was setting this money aside for investment, not spending it. For 14 months, I didn't touch it. Net worth became $80,000, then $110,000. Your salary helps you stay in place, but the system you build can carry you to boundless horizons. And once you discover that, you never want to work a salaried job again. Second rule, a salary looks like a ceiling, but it's actually a floor. The moment you see that is the moment you truly start building the personality of money. My investments brought me $3,800 in profit in 1 year. If you're looking down on that and thinking, what's $3,800? I can tell you, you're making a mistake. Because financial freedom comes from small money turning into large money. Large money lets you build systems, and systems let you be free. From this point on, you start to understand what wealth really is. And after a certain point, you start valuing your time as much as your money. Every minute, every hour starts to mean something. Every hour wasted is an hour the machine stood still. Age 32, $44,000 equity in a rental property, $61,000 in a brokerage account, side business generating $6,200 a month. Still driving the same car, not telling anyone a thing. Don't forget, people are envious. Some will belittle you, some will react differently, but reactions are generally negative. So I'd advise you to stay focused on your work and not talk about money with people. Your perspective on life is slowly starting to change. Things you used to say yes to, you now say no to. You're going on a vacation where everyone splits the costs equally. But you'll actually end up financing 3 people. You say no to a business proposal from a friend who doesn't understand cash flow. You feel friction in relationships. You feel it and you say no anyway. Third rule, below $500,000, you're still buying assets. Above it, assets start buying each other. Loss is not panic, it's a cost. When you reach the $300,000 level, money starts to develop a character. One investment gains $30,000, another might lose $10,000. What matters is staying calm in situations like these and being able to make rational decisions. Because if you want to win, you have to take risks. You need to analyze which risk is worth what and decide accordingly. $670,000, $810,000. You've restructured your business twice. A partnership formed. You exited one investment and redirected the capital into something bigger. You're 36 years old with $1 million in wealth. Your time is more valuable now. You sleep less, not from stress, but from intensity. You're thinking through scenarios in the morning shower, emails to send, meetings to take. You turn down a job offering a $200,000 salary. Your family can't make sense of you. You're ascending to a completely different level. Then one Tuesday, it happens. Your account updates $1.1 million. You wait quietly, searching for words to describe the feeling. There's a faint smile on your face. The satisfaction of achievement fills your whole body. But there's something you've forgotten. $1 million at 4% return yields $40,000 a year. But this isn't freedom. This is a starting point. Being able to say I'm unhappy is not an identity crisis. The real identity crisis is saying, I never made happiness my goal. I admit that now. Fourth rule: wealth is measured not by what you've accumulated, but by what you're no longer forced to do. When money stops being anxiety, when you reach the $2 to $3 million level, anxiety disappears from your life. Questions like, is my money enough? Does this fit our budget? Where's the capital? What's the return profile? These no longer have a place in your life. Business turnover: $4.1 million. Total equity in 2 rental properties: $380,000. Portfolio: $1.6 million. Wealth is a relative concept. For some, traveling freely is wealth. For others, earning a lot of money is wealth. If you ask me, these two concepts follow each other in parallel. You need to build a system to earn a lot of money, and you need to earn a lot of money to build a system. The leverage changes. Here, at $5 million, the game takes on a different texture. From this point on, you're not working to accumulate capital. You're directing it. There's a deal that could return $1 million in 18 months, and one that will return nothing. You know both. One balances the risk of the other. The real issue is the correlation between them. You may or may not understand what I mean. About 6 years ago, I didn't understand it either. I was just beginning to figure it out. As you gradually rise, you start meeting more elite people. You don't look at the latest cars or houses they own. You look at the thinking in their minds. They're patient. Their tempo is different. They make rational decisions. They're not trying to win every hand. Fifth rule: at $10 million, your reputation becomes a financial instrument. It starts generating returns independently of your decisions. You should stop talking about money with people who don't have money, not out of arrogance, but because correct information is worth gold. People who know a subject should be the ones speaking. Any other words are nothing more than empty chatter. At this level, you're rising step by step. A $500,000 position size means you need to watch what you say. Saying this in the wrong room makes you someone's enemy, so you don't say it. You've built a $14 million empire. You're at the tables where big decisions are made. You have no margin for error. A family managing $600 million has invited you to dinner. They want to make a joint investment with you. Your capital and pattern recognition abilities need to kick in. You've reached $30 million. You're 54 years old. You're managing companies and holdings that will employ tens of thousands of people, possibly for years after you're gone. You're more rational. You're not fooling yourself. Your positioning in the game at this level is critical. You've reached $80 million. Most people around you can no longer easily understand you. Your closest circle should be people operating at your same altitude. Fund structures, dynastic foundations, secondary markets. These are a language only people at your level can understand. You're not a different person. You're a person whose context most people can't translate. You're different from before now. Money no longer measures you. Sixth rule: above $50 million, money stops measuring value. It starts measuring access. Cycles. You're 60 years old. You've built a $100 million empire. Your mind now operates in cycles. Infrastructure cycles, credit cycles. Like a sailor, you're reading the weather from 3 days ago and positioning accordingly. Sometimes you're wrong, but generally you make pinpoint decisions. At this level, being wrong means a position finishing 200 basis points below target. A 5-person meeting, their combined capital could reshape a mid-sized economy. You speak for 4 minutes, you ask 2 questions. The room shapes itself around those questions. You leave before lunch begins. No noise, no showmanship. There's a quiet, calm room, and it shapes itself around you. Back to the beginning here. Let's go back to the very start, shall we? You open your banking app. Your money is limited. When you want to buy something at the grocery store, The first thing you look at is the price. You're waiting in line at the store thinking, if I buy this, what will I have to give up? Life is hard. Your eyes go to the cheapest coffee instead of the quality one. You think the problem is money. But actually, the problem is something else entirely. He doesn't know yet that what needs to be solved isn't money. There are mountains of difference between the beginning and the end of this road. There is a vast, boundless gap between the you at the start and the you at the end. The machine doesn't ask if you're ready. It asks whether the transaction is worth it. Every morning it opens. It takes whoever comes with rational decisions and patience. It compounds. Money compounds. And so does everything else. We've reached the most important part. Step in front of the mirror and ask yourself this. Where am I on this road right now? Am I trying to figure out why my machine has stopped? Or am I still at zero looking at price tags while grocery shopping? I'd like you to share your thoughts in the comments. We should exchange ideas for our growth. What I've described in this video is based solely on my years of experience in the financial world. It is not investment advice. Please consult a professional before making any financial decisions.